Hey everybody, Noma Langam Charlie Moses here. I'm here with Dr. John Beckem from the Life After Debt Institute. How are you doing today, Dr. Beckem?
I'm doing excellent. How you doing, Noma?
I'm doing great. So this is, of course, another segment of Ask Dr. Beckem, personal finance expert. So the question for today, I'll jump right in, is how to establish or rebuild credit scores. Just a quick story. I used to have some credit card debt and other debt, and I was feeling so proud of myself that my credit report no longer has anything on it, and thought that I had done so well to get to that point. But come to find out that when you actually want to do things like buy a house, buy a car, and so forth, this is something that can actually work against you. So now I'm back to square one and thinking, okay, maybe I should consider establishing credit again. And also what would be relevant for those who want to improve or rebuild their credit. Will be a great lecture. Is that correct?
Oh, absolutely. Absolutely. You're not the only person that's in this situation. A lot of times when students graduate from college, they have no credit. And so trying to go out and secure maybe an apartment or a new car, they find difficulty and they're asking for someone to co-sign for them. I personally don't co-sign for anyone, and I don't recommend you co-sign for anyone. It actually affects you personally on your debt to income ratio, as you try to secure credit for, it could be a mortgage on a home or something like that, because it's still a liability. So I personally recommend never co-sign. I hope my mother is not watching this. I wouldn't even co-sign for my own mama. I will purchase whatever she needs, but I won't co-sign for it.
Okay, so there's at least an alternative to that.
Yes,
rather
yes.
than co-sign for
my mother.
Mama car.
Yeah. My mother has an alternative. Everybody else, you just out of luck.
Okay, so never. I'm always. If you see my head down, I'm diligently taking notes. So never co-sign for anyone.
Yeah. So let's start off a bit about how a person can establish credit who do not have one. I recommend building relationships with your local bank. That should be your first attempt. So to walk into a bank, explain to them, hey, you live here locally or you work here locally, you don't have any credit and you would like to establish credit. And your first option is to try to get a small loan. It could be as little as $500 to $1,000. And a lot of your local banks, so I'm not talking about your big national like Bank of America or anything like that, but your local hometown bank, because they may know you or they have confidence in your ability to repay it, they probably ask you about your job and so forth, they will give it to you. The second option, which most people might find themselves in, is if that local bank tell you, well, we're not comfortable with giving you a personal loan, you say, well, how about if I secure the loan with collateral? And what does that mean? So you can walk in and you can say, hey, Mr. Banker, I have $1,000 that I'm going to put into your account as a secured asset against this $1,000 loan I'm asking you for. So virtually you put the bank at no risk. So they issue this line of credit. They might call it a lock or line of credit, LOC, and you're able to utilize that line of credit or that loan as needed. So therefore, $1,000 will be your maximum that you can borrow off of it, because that's all the money that you gave the bank to secure with $1,000. So this month you might take $100, and the goal is to repay it. One of the things that I like probably better than the line of credit, if you ask the bank to say, well, instead of giving me a line of credit, how about you give me a secured credit card? Mm-hmm. So most banks have the ability. Some banks use MasterCard, some banks use Visa. It really doesn't matter. You want to have a credit card that has either MasterCard, Visa, or American Express type of card logo. Because those type of cards are going to be widely able to be utilized, and stores are going to be able to accept it. So you give them $1,000, they hold in trust for you as a secured asset and account against this credit card they have given you with $1,000 limit. Another thing that you want to emphasize and ask of your banker, hey, do you report to all three credit bureaus, the three major? TransUnion, Experian, and Equifax. And you want them to report what's happening with your secure credit card, right? So it might not show up on your credit report as secure credit card. 9 times out of 10, it's going to show up as a credit card. Credit card issued by ABC Bank, as an example. As you get this credit card, another thing that you want to do is you want to make sure that you pay it off in full at the end of every month. So you want to show a payment history of this month I borrowed $100, and before my due date, I paid the entire $100 off. And so usually it takes about a year and a month, so say 13 months, to have enough time where other creditors are then going to say, okay, yeah, you have a history established. Another thing that you do not want to happen, or what you want to avoid, is overutilizing the credit card. So therefore, if you have $1,000 credit limit, you don't want to go charge $900 because that affects your utilization rate. You want to keep your utilization rate under 30%. So at no given time do you want to charge more than $300. I probably would say $299 to be safe. Because one of the things they look at is not only do you have a good payment history, but also how much of your credit are you utilizing. So if a bank says, well, wow, I'm going to give her a $10,000 credit limit, well, I don't want her to go out the next day and charge her $10,000 and she can't afford to make the payments. She gets into a bad cycle, and therefore this card defaults. So there's another thing that you also want to emphasize. Now, as we talk about this MasterCard or Visa or American Express secured credit card, there's some things that are, I would say, cons or maybe not as advantageous to you, but you're just going to have to deal with it because you're trying to establish a credit. A bank might charge an additional fee for having this. They might charge you an annual fee. They say, okay, well, we're going to secure this credit card for you at whatever interest rate, but we also going to charge you an annual fee of $100. And that $100 can be broken down into, monthly annual fees, or they might just charge you a one-time annual fee. Another thing that can happen is they can charge you a higher interest rate. So they say, okay, yeah, we're going to secure this credit card, but we want to make sure it's worth our time and we're going to get some money from it. So we're going to charge you a 21% interest rate. Now, if you do as I recommend by paying off your credit card at the end of every month, you'll never pay the interest anyway. It's kind of like having a 0% interest, because you only charge interest charges if you have not paid your bill by the due date. So therefore, most of them go on a 30-day cycle. So on the 30th day, they want to charge you the interest rate. How do you get your security back? Usually after you hold the credit card for a while, and like I said, 13 months, they might say, okay, wow, we have faith in you. You've done great. We're going to give you your $1,000 back or release it. And either they're going to move you into a different type of a credit card, unsecured, or they just tell you, we're going to make this credit card that you do have now unsecured. And they may lower the interest rate if you ask for it, and they might lower the annual fee or totally get rid of the annual fee. Okay. So that's the best way to establish credit. And if your local bank don't offer that, there's also all of the national credit card companies, whether it's MasterCard, such as Capital One. I know Capital One is a good one you go to and say, hey, I don't have any credit. I would like to establish it. I would like to establish a secured credit card with you, Capital One. And Capital One will say, okay, well, what are you looking for? You might say $1,000. They'll say, okay, send in $1,000 first. Upon receiving $1,000, we will then send you out a secure credit card if your local bank is not your first option. And the reason why I say utilize your local bank, because you're looking to establish a long-term relationship. So you might start off today with just a secure credit card, but as you begin to have a credit history and a good credit history, you can go back to the same bank and say, okay, now give me a loan for a car. And, you establish credit that way, you continue your credit. Then you can go back to them and say, okay, give me a mortgage for the purchase of a new home. And now you have this relationship with this local bank who knows you locally, that you're also in the community, and hopefully you're buying cars and homes from local dealerships or local realtors. And so therefore you establish this relationship.
Okay. So I can ask my question now.
Yes.
So the question goes back to when you said, okay, you're going to get a small loan or you're going to get the secured card or whatever.
Hmm.
And usually people assume that the person coming to ask to borrow money has a job. And that's what makes them feel comfortable with giving you. Um,
Absolutely.
so I obviously don't have a job, at least not in the traditional sense.
Hmm.
So how does that work if I showed up, say, with one of my hats and just said, hey, I'm just a stay-at-home mom who wants a loan? Would that go over the same?
Well, yes, because the reason why they ask you about your job is to see if you have some type of form of repayment,
Right.
right? Okay, so in the case where you go into a local bank, you're saying, okay, well, I'm a stay-at-home mom, but I do generate some income, whether I'm getting it from, family, friends, husband, if you're doing some passive things online. Yes, it's an income, but I'm minimizing your risk or eliminating your risk by giving you the whole $1,000 up front to be held in security. So as they give you this $1,000 secured credit card, and that's why we say secured, if you do not repay it, they just take the money from the account that you don't even have access to anyway. So they had $1,000 sitting in the account, which they're going to use to, lend out to other creditors anyway. But if you default on it, they take the $1,000 and close out your account. So I don't think it becomes that much of an issue as a stay-at-home mom if you're dealing with your local bank and you have secured that credit card with the money up front.
Okay. So then my next question really doesn't apply because the answer is the same. And I was going to say, well, what if I show up and say I'm an entrepreneur? So I do have an income, but
Yeah, it's the same thing.
Right. Okay.
Right. I mean, and remember, most banks have the ability, especially local banks or credit unions. I don't want to say banks only. Credit unions are a great source for this as well. And you can have the ability to negotiate, right? So say you have a banker and you could tell they're fidgeting, not feeling, secure or comfortable with this. You could say, hey, I tell you what, how about I give you $1,000 and you give me a credit limit of $800? So you see how as you begin to minimize the bank risks, they feel more secure or comfortable with giving you what you want, right? So now you're telling the bank, I give you $1,000, I'm only asking for a credit limit of $800. And again, hold this, extra $200, hold the whole $1,000 in security for the credit card.
Okay.
Therefore, if you generate any fees, say if you have an overdraft fee or a non-sufficient fee, a fund fee, they know they have this additional $200 to regarnish their fees plus close out your account at no loss to them.
Right. So that's how to establish the credit.
Yes.
And once you establish it, you said just basically regurgitating what you said. After about 13 months is what it usually takes for them to just say, okay, we're comfortable with giving you a credit card that's not secured. But
Absolutely.
also, it's also the point where other creditors will be looking at your credit report and seeing that you have some history of making successful payments.
Right, and that's why asking the question to the bank, do you report to the three major credit bureaus, even with a secure card, is very important, right? You don't want to go through this and they don't report you to the credit bureaus. You right back where you started from.
Right.
But you want to make sure, yes, they're going to report your credit history, with TransUnion, Experian, and Equifax. There are other credit bureaus, but those are the three major that most companies and bank institutions utilize.
Okay. So that's how to establish. Now, supposing you're now in a situation where your credit score is low, right? That would be how
Yes.
that's what you mean when you say rebuild.
Right. So now is the point. So the first segment we just talked about establish a person who had no credit history, no credit, and they want to establish. The second part is rebuilding your credit. And there's a more that's involved with rebuilding your credit. The first thing I recommend is everyone is entitled to a free credit report at least once a year. So go and contact. You can either do it by online, telephone, or by mail, and you call up the credit bureau. Equifax, TransUnion, or Experian, and you can go online and find all this information and say, hey, I want to pull my once a year free credit report. And then once you have that credit report, you can begin to see what's on your credit report. What creditors are reporting you delinquency. delinquent rather. And what credit card or credit companies that you have already obtained credit is saying that you past due, or they have a charge off or a write off. Or are there any discrepancies? Credit bureaus make errors. Are there any errors? So the first thing, as you begin to look at your credit report, I want to look at, are there any errors? Is there something that belongs to someone else? Is there something that's not mine? Is there something that's inaccurate? If you are male and say you are a junior or a second or the third, have they, accidentally put one into the other, whether it's your father, grandfather, or son, or whatever, have they got our credit report mixed up? And so, okay, if you find a yes to that, that's when I want to start writing letters to the credit bureau saying, okay, this is not mine, verify this information, remove this. And a lot of this you can do online now. You can dispute some of these different things. Mm-hmm. Next, after you've gone through and you figure out whether or not all the information is yours versus not being yours, are there any errors? Have someone said that you owe them $10,000 when you really only owe them $1,000. Have someone reported you as a late payment when you actually paid on time. And so these are some other inaccuracies or things that you can dispute and get removed. Next, after you've done that, you can go through your credit and say, okay, well, how many things are on here that are older than 7 years? Because after 7 years, these things are supposed to fall off your credit report unless there's something like a bankruptcy, which can last 10 years. But, credit cards and all these retail things like that, they usually can report up to 7 years from the last reporting. So you want to see something that's on there from, 1999, it should be removed.
Does that not vary by state?
I don't know that to be 100% true if it's going to vary from state to state, but in general, that's the practice. So you're going to find that over the majority of the states, if not all of them.
Okay.
All right. And so now you're starting to see, okay, now what is really yours? What is not yours? Now I want to begin to stop charging things, stop being delinquent on my payments, and actually start to, from that day forward, build and establish a good payment history. Pay down your balances, eliminate balances, but most important, make all your payments on time. Start to establish that good payment history. And then also start to establish a lower percentage of my utilization rate. Remember, I told you, you never want to utilize 100% of your available credit. You want to be under 30%, because as you go above 30%, that's actually negatively reported to the credit bureaus, which affects your FICO score. And there's other video that we're going to create that's going to really break down what a FICO score is, what it means, where it came from, how do they calculate your scores, what does the numbers mean, how can you improve them, how can you change them, and so forth.
Okay. So question, I know because we've done another question segment where I asked about, or you talked about consolidation. So I just want you to touch on debt consolidation, because when someone thinks, okay, my credit is really messed up and I want to fix it, let me get somebody who's going to help me fix it. And then there are people who I look at as predators who will say, let me help you. Right. Not really helping you.
Mm-hmm. Well, I'm not a proponent of debt consolidation. Couple of reasons why. Usually once a person who's badly in debt go along and get a loan that's considered a debt consolidation loan, after they receive the monies and pay off the credit cards or creditors, because it can be more than just credit card holders, they get right back into debt. So now you have all this freedom on your credit card and accounts, and so now you charge it back up. And so you have the credit cards that you already have now maxed back out, as well as this debt consolidation loan, which in 9 times out of 10 is going to be more than what most people can afford. So that's one reason. Another reason is usually debt consolidation loans charge high interest rates, and a lot of times they charge a fee for their service. And this is something that if you watch some of our other interviews, videos, or you participate in our institute, you can find out different avenues and strategies to implement to do it yourself. You don't need to pay someone a fee to do this. You don't have to pay a high interest rate where someone else is making a lot of money off of your predicament. Number three, a lot of debt consolidation loans show up on your credit report, and it actually lowers your credit score because debt consolidation gives a red flag of someone who does not know how to handle debt properly, who don't have any discipline or bad habits. And so, just that code that comes up with debt consolidation actually lower your score when actually you're trying to raise your credit score. So those are the three main reasons why I am not for debt consolidation.
Okay. So rebuilding your credit score, those are the basics. Was there anything else that a person who was trying to rebuild their credit score would need to keep in mind? I mean, other than the obvious.
Stop charging, stop making late payments.
Right.
Try to get most of your payments directly deducted from your, checking account or savings account. So therefore, you don't have to worry about meeting the deadline, or did I write the check, or did I put a stamp on it? I put it in the mailbox, by a certain date so they can get it by the due date. Pay it electronically. Even if you don't want to have it automatically deducted, you have the ability to go online and make a, automatic withdrawal, or automatic payment rather, from your checking or savings account. For people who are trying to reestablish or rebuild their credit, it's many things that you can remove yourself from it. Automatic deductions, tearing up your credit card, getting rid of your access to the credit is going to help you.
Okay, and then the last question, I guess, related to this is, you kind of said that when you want to establish your credit, it takes about 13 months before it basically kicks in. Now, with rebuilding your credit score, if it's a hot mess, at what point do you get to, or how long does it take before you get to the point where somebody may not think it was a bad decision to even consider giving you a loan for something bigger like a car or a house or whatever else?
Well, if you look at 7 years as being the general to get back to a perfect. So when I talk about 7 years, without any mistakes, without any hiccups, without any late payment, and if you go and view the FICO score video that we create, there's other things that go into play. As you start to do that, you get above 750 to 800, right? So if you start off, let's say horrible credit, you're 200. As you begin to, implement these different things, you're going to gradually see an increase, right? So as you begin to make good payments, you can go from 200 to 250, 275, 300, 400, 500. So it's going to progressively get better over time. How long does that take? Well, it depends on how bad your credit really was, right? So it's going to be a shorter amount of time for those who maybe started off at 500, 600, 700 versus those who start off at 200, 300.
Does it even go that low?
You'd be surprised. You wonder if some of these credit scores that somebody just, write their name down, their credit is so bad. I've seen some very horrific credit scores, and I've seen some very, excellent credit scores. And as like I said, we talk more about FICO score in that video. It plainly show you out the different ratios of what's a credit score, what's a bad, where are those ratios? Because it is a ratio. But we were talking about time frames. And so as things fall off your credit and more good things are placed on your credit, then you're going to see this gradual increase. Also, as you rebuild your credit, you will be able to get new credit, but until you get to past like maybe 700 or above, that credit is going to cost you more money than someone with a good credit score. So that more money can cost you in the fees or interest rates, right? So if I went out and got a credit score, I'm gonna be below 10% as an interest rate, versus someone who does not have a credit score can be, high 20s, if not low 30s or more, or not qualify for it. The different type of credit cards that you're able to qualify for is going to be different. I can qualify for a credit card that has a high availability or high limit that also pays me back points, that does not have an annual fee or biannual fee, versus someone else who might have something, or someone else who might have a bad credit score might not be able to qualify for that. as well as car loans. A person with a good credit score can go out and get a car loan at 0.09% interest or 0% interest, with some of the different rebates or incentives, versus someone with a bad credit score going to pay a very high interest rate to get that same car loan. Not saying that they can't get along as they go along the way. It's just going to cost you more money, whether in fees or interest rates.
So do you equate no credit score with bad credit?
No, I never equate zero with bad. I equate bad with bad, right? So not having a credit score, it's not bad. It's not good. It's just zero, right? But a person with no credit score have the ability to go from zero to a very, very high credit score over a small period of time by utilizing the secure credit card, as I mentioned. Because immediately now when it goes on there, they're going to say, okay, wow, he or she does not have a lot of debt. What we see is that we see one credit, account, and they're paying it on time and they're paying it full every month. So that score is automatically going to jump from a zero to a higher level. You won't be at the 850 because there's other things that go into establishing a very high, or what they call an A++ credit score. But you still should be 700 or above, which is pretty good.
Okay. Well, great information, Dr. Beckem. Great information here. We're going to close out because this is just one question that you're answering. Certainly you'll come and answer back more. But before we go, I want to just remind everybody that they can find you or find more courses which are currently being uploaded at the Personal Finance Institute. And that is Personal Finance Institute at the Teachable platform. So it's Personal Finance Institute. Also, they can find you at drjohnbeckem.com, drjohnbeckem.com. And over there, you also have a blog where you share information like this, and segments like this will be up there at drjohnbeckem.com on the blog segment. So I want to say thank you to you. I always have to kind of remind people that this is free information that we're getting from somebody who could actually have made a lot more money by charging us for this information. So I do appreciate you, and I do appreciate the information.
My pleasure. It's my way of giving back.
So thank you guys, and thank you, Dr. Beckem.